Crump, the Queen of Real Estate with the Coast Blues Realty Group. Thank you for joining this week's Tea and Crumpets. Today I have Rob Smith. He is the branch manager and loan officer for Edge Hunt Finance. So thank you for coming.
Thank you for having me.
Yes, well, I'm excited to have you here, and you're going to give us some good insight on some things that Edge Hunt does. But first, you've been actually a loan officer for quite some time.
I have. I've been a loan officer here locally for about 20 years now.
Oh, wow. So you and I kind of started at the same time.
That's right.
Yeah.
Our paths have crossed a few times.
Yes, we have, and I can vouch. He can. I call it. He's a Houdini. He can definitely do some magic with some borrowers. So you definitely know what you're doing. Well, tell us a little bit about Edge Hunt Finance. You said they actually have a nationwide presence. You were telling me about earlier.
They do. We're licensed to do loans in 48 states.
Wow.
They're one of the nation's largest mortgage broker platforms. To where I'm basically self-employed. They provide the platforms and getting signed up with all the nationwide lenders and everything like that. They're also the #1 VA lender in the nation as well. So really good at doing VA loans. I personally am a Navy veteran, so
thank you for your service.
Yep, thank you.
Yes.
So any house I've ever bought, I've always done a VA loan. So very experienced at doing, helping veterans get into homes and refinance whatever their need is.
Yeah, and you were saying that y'all actually have multiple lenders that y'all can go to.
That's right. When I first started with Edge, it kind of was mind blowing because we're signed up with 120 different lenders. I mean, they offer
huge.
Yeah, they offer programs that I've never heard of before. I really had to do some research on them, but I mean, it's just mind blowing.
Well, and which we'll get to in a minute. But speaking of programs y'all offer, we will have this sheet on the video because there's a lot, even some that I hadn't heard of. So I'm excited about getting into a few of those. And so obviously, the condos are a big deal down here, and y'all can not only do warrantable and non-warrantable, but y'all can also finance condotels.
Condotels, that's right. That's right.
Which is very rare. I mean, that lenders can do that, so that's awesome.
Being down here, that's so important because that's our market, especially yours.
For sure. And even though we only have a couple true condotels, lenders that like to label them condotels, even though they're really not.
Just about every under.
I know. And you're just like, it's not a condotel. Like, you can rent it out, you can stay in it. It's not dictated. You can actually decorate it the way you want.
That's right.
Yeah. And so, one other thing. So here we'll talk about a couple of these little programs that are interesting. So a hard money loan.
Like for a fix and flip.
Okay.
What that is basically it's a 12-month interest-only loan.
Yeah.
You don't have to verify income. A lot of times you don't even have to order an appraisal on the property.
Yeah.
This is simply to get money quickly to purchase a property. You've heard I want to purchase one off the courthouse steps. This particular type program you can do that with.
Really?
Of course, it's a 12-month interest-only type loan, so you don't want to keep it very long.
Yeah.
But you're only required to make the interest payment on it. And there's no prepayment penalty or anything like that.
That's awesome. That's huge. Now, what's the no income? Obviously, we already know what no income verification is, but you were giving me kind of an example with primary residence.
That's right. You remember back in the day, stated income, stated assets.
Yes.
All right. They haven't moved to that far over. The pendulum hadn't swung. But with this particular program, there's a lot of people may know the DSCR type loan. That's for an investment property, where an investor is going to buy a rental income. This program is specifically designed for primary residence borrowers to where you don't list any income, you don't list the employment, so there's no debt to income ratio requirement. But what they're looking at is they want you to have 6 to 9 months cash reserves, and then you put 20 to 25% down towards the property. And the way that they look at it, you've got a little bit more equitable interest going into it, and you're a little bit stronger on assets. Types of borrowers that would do this type loan, maybe self-employed people that don't show a lot of provable income on their taxes or whatever.
No, that's awesome. And then the no FICO score for FHA and VA.
We do a lot of those here lately, to where you've got somebody that just is just getting started. I've got a 20-year-old son that hadn't really built a whole lot of credit. He may not have the FICO scores, but he's got a good job, he's got good income, so we can help those clients that just don't have a credit score for FHA and VA.
Now, typically in that scenario, if there's not a FICO score, or they're not using it, are the interest rates just a tad bit higher?
Usually about 1/8 to 1/4% higher on those type of programs.
That's not too bad. Oh, wow, okay. Now, what is a Piggy Bank loan?
That's basically like if you want to put 10% down, and then you do an 80% first, and then a 10% second mortgage. And what you're trying to do there is just avoid the PMI insurance.
Oh, wow. So, and that can save quite a bit.
Quite a bit of money.
I've never seen that with the Piggy Bank. I've never seen that.
Well,
or at least I haven't had a loan officer tell me about it, because I mean, a lot of people want to put the 20% down to avoid it. Sometimes they don't, but I've never seen one where they're like, no, we can do a 10%.
Yeah.
So, and then there's also the 40-year terms.
We do. We have several lenders that offer a 40-year mortgage now, and you can actually do an interest only for the first 10 years. Most of the people that do those type loans we're seeing as real estate investors, simply to
keep the
cash cash flow a little bit, and then they know they're not really going to pay that mortgage off. They're probably going to sell it 3 to 5 years down the road.
For sure, and it keeps that lower rate. Now, when people do the 40-year terms, is that with, for instance, like we see that just with the conventional type loans?
Yeah, just those are conventional and non-QM loans.
Non-QM, okay, gotcha. Now, are interest rates typically a little higher for the 40 years?
They are a little bit higher on a 40-year term.
Okay.
Usually about 0.5% higher than what your normal rate would be.
Okay. And speaking of rates, what are the hot topics you're being asked by your borrowers lately?
All right.
I gave it away because obviously it's
for over 2.5 years. It's nice to say, hey, rates have eased up. We're starting to see rates come down. Yeah. The big news next week is on September the 18th. The Fed is going to announce that they're going to cut the rate. So what everybody's focused on, are they going to, what is that going to be? Is it going to be 1/4% cut? Is it going to be 0.5% rate cut? Of course, the market has already kind of like priced in that 1/4% rate cut in anticipation. But if they were to cut it like 3/8 of a point, or anything more than 1/4, like 0.5%, then we'll probably see rates continue to get better. According to the experts that we follow, rates are supposed to continually go down. It's not going to be a drastic, but they're just going to continually to drift down. So, clients that are kind of on the fence, I mean, now's as good a time as any to jump in to the game.
Yeah, I think so too, because once those rates do go down, there's so many people that are on the fence, they're going to, not necessarily flood the market, I don't want to say that, but they're going to get off the fence, and they're going to start looking, and what's going to happen is it's going to cause the prices to go higher, and then we'll see that shift from a buyer's market more to, more neutral to, possibly a seller's, depending on how much lower. And we were given an example. A lot of times you hear these, we're expecting this rate cut or this rate cut. For instance, like a $320,000 loan amount. Right. What is the savings someone could potentially see on that loan amount with that rate cut?
Yeah.
On average, I mean, obviously this is speculation if it goes that low.
I think we did the math on a $320,000 loan amount at a 6% interest rate. If people wait for rates to, let's say, drop down 1 percentage point down to the 5s on the same loan amount, that's going to save you $200 a month.
Yes.
If we take that $200 a month, multiply it times 12 months, that's $2,400 in interest you paid. Well, if you bought that house for $350,000, put 30% down to the loan amount of $320,000. 12 months from now, if all these people jump back into the market and drive that $350,000 house up to $375,000, I mean, what would you rather do?
Oh,
You know,
yeah.
if you gave me $2,500, that's what you're paying extra in interest, and then you're going to be able to cash in with, you know,
Yeah.
extra $25,000 in equity. So basically, you'd be paying $25,000 more for that
Exactly.
house.
So I think a lot of people don't look at the big picture.
Yeah,
And then obviously, you know, they can wait 6 months and refinance.
that's right.
Yes,
That's right.
6 months is key.
What is that? What is that saying? You know, fall in love with the house and date the rate. Because
Yes.
you can always refinance in the future.
Exactly. I mean, you're not stuck with that. And so, and then obviously, what's your current clear to close? This is with, obviously, it's all based on no issues with the appraisal. It comes in like normal time frame. Title work comes in with no issues. And obviously, your borrower's A+ student gets everything to y'all. So what's
So it's going to be a client like you that gets us
all
ASAP and everything like that.
Exactly. You ask and it's there.
All right, underwriting turn times right now are usually like 24 to 48 hours. So if you've got a client that, like, when we make a request, gets us what we need, and like you said, appraisal, title, and everything like that, we can close within 2 to 3 week time frame right now.
That's awesome. That's huge. Because, I mean, that can make a big difference when somebody's making an offer. Because that's why people like cash. It's like, because they can do quick close and they don't have to worry about, you know, potential new dues showing up, things of that nature. So if a lender can say, you know, hey, we can definitely close within a month, potentially even 3 weeks or less, I mean, it just means that potentially more off the purchase price.
Yeah. And this isn't, you know, like a 9 to 5 job to us. It's like from the time our feet hit the floor when we wake up in the morning till the time that
you go to bed.
Go to bed.
Yep. And then in the middle of the night when you wake up, I always check my emails, make sure there's any work that I need to do, and
that's right.
And it's literally a 24/7 job.
That's it.
And you take great pride in it, so I appreciate it. And we'll definitely have this sheet because it gives you, you know, for them to look at, and we'll have his contact information as well. So if you see anything, you know, on the sheet that, you know, some things might pop out, like, you know, investor, non-warrantable condos. I mean, there's a long list of things y'all can offer. Any question,
any scenario people have, I mean, that's what we're here for. You know, I love doing mortgages and talking mortgages. And everything like that.
Being real estate.
That's it.
Yeah.
That's it.
Well, good deal. Well, thank you for joining us, and thank you for watching, and we hope you enjoyed it.